Good morning and welcome to the Street on BNN Bloomberg for a Monday. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Jeff Weniger, head of equity strategy at Wisdom Tree, will be joining us for the hour. In 30 minutes, we'll discuss the latest OPEC meeting with Jeremy Irwin, global crude lead at Energy Aspects. Of course, want to hear from you this morning on First Call. Reach out with your questions on sectors, and we'll have Jeff answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Oil prices rising today. Been all over the place, actually, right now. Now they're back on the plus side. They're up about 0.68% after Iran and Israel traded strikes on the weekend. Iran hit Israel for the first time since the start of the ceasefire. Israel then struck targets in western and central Iran. Meanwhile, OPEC Plus will increase its output target next month. It will be the fourth oil output quota hike since the closure of the Strait of Hormuz. The wait may be over for Apple investors who want the iPhone maker to deepen investment in AI. The company kicks off its annual Worldwide Developers Conference today. It's expected to feature a much-anticipated update to its Siri digital assistant, as well as other AI features. The tech giant first previewed its AI features 2 years ago before experiencing delays. And now our top line story. U.S. stock futures are edging higher after last week's Friday's tech sell-off, even as rising tensions in the Middle East put pressure on oil and bond yields are up. You can see the reaction today for the U.S. futures. Going to take some of that money back, I guess, or give it back. It was a roller coaster on Friday. Boy, oh boy. A lot of investors are still cautious, weighing geopolitical risks and interest rate concerns against some dip buying and tech stocks. More on this all. Let's bring in our guest for the hour, Jeff Weniger, head of equity strategy at Wisdom Tree. Jeff, thanks very much for joining us today.
You got it,
from
Roger.
Chicago. Good to see you. Quite the week last week. It was due, though, wasn't it, in many ways?
Well,
was it? Well, sort of. I mean,
yeah, I think it was kind of due. I mean, you had the VIX down at like 16 or 17, and then I think in the Friday session we got up to 21. And if you rack your brain here upon that question, back to March 30th when we bottomed this market, I think we never had a down week up until then.
Yeah, we were on a almost 10-week run.
Yeah, 10, something like 9 or 10, and we needed to have some sort of comeuppance.
Yeah.
Probably rightly so. I mean, there's starting to become a lot of giddiness in this market. And now we have to face down 5 trading sessions this week with the SpaceX IPO and a slate of central banks who might hike.
So what do we look at first with all that? What's the biggest issue or biggest attention grabber right now, do you think?
For this particular week, I'd say the SpaceX IPO and whether or not that goes off without a hitch. Now, that's going to be in the Friday session. But that's one of those things that's just kind of not necessarily affecting my portfolio or your portfolio. We're not in it, but that's going to be the headline grabber. But we do have a lot of central bank meetings, and now some of it has had a little bit of a about face in terms of some of the market expectations, because the good thing is if you look at last week, everybody's going to remember that Friday session and taking out a bunch of names there, especially in the memory side. But everybody's going to forget, or maybe everybody's going to forget, we just had some blowout labor market numbers. And to the extent that some of those blew out, the Canadian number and the U.S. number, now suddenly we have to spend the whole summer talking about how the BOC or the Fed are going to end up tightening policy. I don't think that they will, but now we have to at least talk about it.
Okay. Let's talk about the IPO first. With SpaceX, what happens, do you think? How do people react if it doesn't get what it's going to get? Or is it going to get what everybody expects it's going to get?
Well, with the SpaceX IPO, I think there's a lot of misconceptions, right? So whatever the number is going to be on the total market cap of the company, let's say it's 1.7 or 1.8 trillion, and we have to start using a T now.
Yeah,
trillion,
isn't it? Yeah. And it might be a $100 billion swing. No big deal.
Yeah, I know. It's wild to even get your mind around this. But remember, you have to think about you're posting this onto NASDAQ. And now you're looking at tens of trillion, 50 trillion or whatever the number is for U.S. Equity capital markets. And then also the big question with that is, well, Elon's selling. So should we even be buying, right? I mean, you almost forget there's a buyer and a seller in every transaction. So to the extent that they're selling, who's going to be buying? Ostensibly, a lot of the passive indexes and the funds that track them. That will be the big issue. But remember that when you come in with 1.7, 1.8, you're not going to suddenly be 2% of an index fund because it's based on the float. And I think they're going to float something like 75 billion. So it will still be way down the list in a lot of funds until a lot of those locks end up expiring around Thanksgiving, Christmas.
All right, so there's a lot to unfold still with that. And then with the banks and the rates and the employment numbers, I think especially in Canada, caught a lot of people off guard.
Well, look, Canadians had printed a bunch of non-farm payrolls, that maybe 4 or 5 in a row, that were really, let's use the U word, ugly, I think. And then it was 88,000 to the good, printed, 4 or 5 sessions ago. That was corroborated in the U.S. We had also a big jump in non-farm payrolls, also upside revisions to the April and March numbers in the U.S. Down in the U.S., they also had the JOLTS, which is job openings, labor markets, or labor turnover survey. Mm-hmm. That JOLTS number went sky high. And so now if you think about what somebody who's bearish risk assets might have been pointing to, private credit, everybody losing their job from AI disruption, what have you. I think you got to throw Hormuz in there as well.
Yeah.
The everybody losing their job from AI disruption thesis needs to be put on hold a little bit. I mean, things look pretty good.
It's an interesting one with the AI and the jobs because I think it will replace it, but the big question will be, it will replace jobs. Are there going to be new jobs created with it? Or, is this the revolution where there is no post-revolution? And I don't know if we know yet.
And I think it would be very hubristic to say that we do know. Yeah. And I think that there's a lot of people out here who are claiming that they do. And this would essentially be the first technology where it comes in, disrupts, and it truly does make people permanently unemployed and never come back. And I think that that's a pretty big leap to make right now. When
It's
frightening, and I entertain it myself.
Yep.
I mean, how could you not entertain it? I mean, we're using the stuff.
Yep.
We're using it at Wisdom Tree. But when you take a look at, for example, the job postings on Indeed, right? So there's time series on these, 5-6 year time series on some of these theoretically very disruptible line items, like software engineers, like scientific researchers. Carving out a bottom on these job posts, it's like a chart of a stock, carving out a bottom and now accelerating upward on scientific research positions in the last, 3-4 quarters. Nobody believes you. You have to show the chart to people. They won't believe you because this is all we're bombarded with it.
Yeah, and we've been told it's the end, it's the end, it's the end.
It's the end.
Okay, and with the banks, with the rates, what do they do with all this, with the numbers? And
historically, when we try to figure out interest rate directionality and the implications for banks, whether banks are going to outperform or underperform, it's one of those where it's more difficult. The theory makes more sense than the actual paperwork. Now, the banks as a sector, financials sector in general, up here in Canada, TD, BMO, these names are just up and to the right on these beautiful 45-degree angles. When you see some of these charts on financials up here, why get in the way of it, right? But down in the States, if you look, it's the tech sector. Everybody knows that. Tech has been clobbering some of these sectors. We'll have to see how it ends up playing out. But now you have some relative valuation disparities between tech and financials. It's thousands of basis points of performance gap over the last 12 months.
And what is it, 51% of the S&P 500 trading at 10 times more than sales?
Yes. Yeah, that was, I put that exhibit out on social last week. It did some viral action. And so when you go back to the dot-com period, it's, depending on who's pulling the data, call it like a third.
Let's not go back to the dot-com.
Well, people make those comparisons, and then I get accused of making the comparisons as well, and I do.
Well, you have to.
You have to. And look, here's a notion that I commonly hear, and then I scratch my head and I say, well, what are you talking about? Well, you have to understand it. More than 10 times sales, more than 20 times sales. It's because these firms are gaining monopoly profits. Okay, fine.
Yeah.
Which one of the top 10 names in the S&P 500 is not directly competing with another top 10 name in the S&P 500? Go to SpaceX.
Yeah.
SpaceX, we think that is a rocket company. It's not. It's an AI company. It's an AI company. Okay. Well, Alphabet's an AI company. Microsoft is an AI company, right down the list. They're all going to be competing with, now some might have more business services, some might have more consumer services, but generally speaking, they're all jumping in on each other. So if you're going to have robust margins, you better darn well be a monopolist. And I'm not convinced that that's the case.
All right, we got to take a break on that note there, but lots more to talk about when we come back. Next, we'll take a look at the markets before the bell, and Canada's economy has been flashing some warning signs, and history suggests maybe the U.S. is next. We'll get more on that after the break. All right, time to take a look at the market, see how things are shaping up after that Friday. We won't talk about that Friday that much, but we will a little bit. We'll start with U.S. futures. A little bit of a bounce back happening today. You can see the NASDAQ is up by 1.3%, and the S&P 500 is up by 0.72%. Now, the Asian markets, though, still feeling the heat. Let's take a look. Now, the Nikkei ended up down by 3.85%. The Hang Seng, this is on reaction to Friday, up by 1.22%. And what's unfolding in the Middle East as well, the CSI 300, 2.14%. And South Korea was off, I think, more than 8%. It may have recovered a little bit, but it's a volatile market at the best of times. Off to Europe now, see how they're responding today. And you can see a bit of a mixed bag right now. FTSE's off by, are up by 0.11%. CAC 40 down by 0.16%, and the DAX off by about 0.4%. Now the TSX, and it took a hit on Friday, off by 2.28%, mostly dragged down by materials. But some of the movers and shakers, let's take a quick look. There actually were some winners. Transcontinental up by 7.4%, Curaleaf 6.5%, 6.6%. Arrow Copper off by 16%, and TerraVest being investigated right now for possible insider trading. It's down by it was down by more than 31% on Friday. Looking at metals right now, everybody's down. Gold off, down below 4,400, almost 4,350 right now, off by 0.4%. Silver down by more than a point at 68.40, and copper's off by about 1.6 at 638. Western Canadian Select from Friday. It was dropping 2.57% today. It's been a bit of a roller coaster for WTI, and it was up and it was down. And now it's back up by 1.5% at 91.93. All right, the U.S. Canadian GDPs, they often move together. So Canada's recent string of negative quarters could be signaling a downturn for the U.S. Let's bring in Jeff Weniger from Wisdom Tree to talk more about this. Are we that powerful, Canada, that we can drag the United States down, the mighty United States? What's the connection between the two that actually is an indicator?
And I think in order to talk about Canada and the U.S., you have to figure out what is the state of international relations in 26. And
let me break out the crystal ball.
Exactly. And if you think about perceptions versus reality, right? There's been so much. I mean, at what point in our life did the Canadians have a friction with the Americans? And now we have it. Like, let's lay that on the table. There's frictions.
Absolutely, yeah.
I don't know if there's frictions between me and you, though.
No.
Right?
No.
Or between,
at the base level, no.
Yeah, it's international frictions. But the reality is it's still a symbiotic relationship.
Yeah.
If you think about what does the world look like in 28, 29, 30, where there's now a big question mark, Middle Eastern supply on the oil side. Well, suddenly, maybe you have a kumbaya situation with the Canadians and the Americans. I mean, that could be a very real situation.
Well, I mean, it could come as soon as the CUSMA, if CUSMA signs.
Yes.
I mean, a lot of people are saying, well, I think we'll just end up seeing something really similar to what there was already.
Yeah, and that's one of the big overhangs on basically the question mark for the BOC this summer is really what ends up happening with the trade deal with the United States and Mexico, for sure. I mean, that's one of those 3 or 5 things in the conversation. But look, we have to take out a magnifying glass. Mm-hmm. In order to take a look at the degree by which Canadian GDP went down in the most recent quarter.
Yeah, it was.
But it was down.
Yep. But they're saying they still may be adjusted. It may end up either a wash or up. Who knows? It depends.
Yeah, you can do a revision and it's slightly in the black. But yes, it's.
But it's still worrisome.
Is it? Look, you have 3 out of the last 4 quarters in the red for Canadian GDP. And nobody wants to see that. Mm-hmm. And when you go back in time, because the definition of a recession is 2 consecutive quarters. And now you have 3 out of 4. when you go back in time and you say, okay, when Canadian GDP did X, Y, and Z, in this case, go down 3 out of 4, what was the situation with U.S. GDP? Right? Because that's going to determine whether or not, or theoretically determine whether or not your Mag 7 stocks go up or down, theoretically. Well, the times that happened were 82, 83, and so that's kind of the Volcker recession-ish aftermath type period, because that's really 80 to 82 down in the States. The 90, 91, again, the Gulf situation, that's Saddam Hussein with Kuwait, and that was the other time that occurred. And then Gulp 09. And then here, call it Q1 26, because that's when the number is 4, even though we're in Q2. And so, look, does it mean that U.S. GDP must roll over and head southbound, which would really upset the apple cart, because we got the S&P at 7,400. It would upset the apple cart. It doesn't necessarily mean that it will occur, but it's something to take note. I mean, we can't just play make-believe that you have this G7 economy that's bordering you and that it is struggling on the GDP side, and that suddenly you're not going to have any issue with, let's say, your auto industry or something like that. Have
we not diverged at all? I mean, it's been a year since the tariffs, over a year now. Is there some diverging, or no, we still pretty much intertwined?
When you look at a lot of trade data, the country that stands out for having reduced, it's going to be painfully obvious, reduced relations with the United States is China. Everybody else is pretty much, getting much closer. You have Canadians getting closer, the Brits getting closer to the Europeans as well. It's still a very close relationship. I mean, I think a prime example is me. I'm sitting here, I'm American.
And you're welcome to sit here.
Still coming to Toronto, doing my thing.
Welcome to sit here.
Absolutely, absolutely.
So but I do find that fascinating, because I know there's been so much talk of it. But what is it are we just an indicator, or are we actually a trigger?
It might be an indicator. I mean, because generally my back of the envelope was always 10 to 1.
Yeah.
Population relative to the U.S. 10 to 1. Auto production, anything it is.
Yeah, it's kind of a 10 to 1.
Yeah, it's like a 10 to 1 in every line item. So I think it's kind of like if you said, all right, take it from a perspective of the United States. Let's just guess some block in the United States that's 1/10 the size of the total GDP. These 5 or 6 states, let's say Washington, Oregon, Idaho, Montana, name 5 or 6 states. Yeah. If you knew that those 5 or 6 states had 3 out of 4 consecutive GDP prints, you knew nothing else, then you'd say the other 44, 45 states might have a little bit of an issue. And I think that's fair. I mean, if you look at basically some of the numbers we do have the labor market improving. Mm-hmm. We do have manufacturing accelerating higher, but there's also this major lag effect from the reality of we had this, what I would describe as a mini oil shock. It's not for reasons that go beyond trying to get into it in a 60-minute show, I do view it as a mini oil shock. We are so much less labor intensive, but it is a shock to some degree. And so that is something that should...
But we seem to have weathered it far better than any other...
Oh, far better. Far better.
So far.
I mean, the example I frequently give, because we have, for example, on fuel economy from the Environmental Protection Agency, we have that data back to the mid-'70s. So you can't really get the 73 oil shock, but you can get the Iranian Revolution of 79. And the example I frequently use is if you take a Dodge Grand Caravan or a Chrysler Pacifica manufactured in the last few years, this would be a gas guzzler by anybody's definition. That vehicle is better in terms of fuel, materially better in terms of fuel economy than anything on the road back in 79. And also, we need to remember that when you go up to, where were we, 150 a barrel in summer of 08 on WTI? Yeah. Let's call it 150, and then somebody can correct us later if we get that number wrong. Summer of 08 is 18 years ago, my man. And think about that. And so if you look, for example, in U.S. wages, average hourly earnings in the United States were $17 back that summer. Now they're $32. And so we start thinking about a liter of gasoline, a gallon of gasoline, whether in Canada or whether in the United States. We need to remember that even though we lament in Western civilization a lack of wage growth, nominal versus real is critical. So called a mini energy shock.
All right, we got to take a break on that note there. We've got lots more to talk about. Coming up after the break, still ahead, Saudi Arabia cuts crude prices again. We'll be talking about this a little later in the show. Supply disruptions keep interrupting things. And, of course, our phone lines will open soon as well. 1-855-326-6266 is the number to call. We're not open yet. We're just letting you know what that number is. And you can also email firstcall@bellmedia.ca. to see what's on the radar now for ahead of our skis there. Okay, time now for On the Radar. We're back with Jeff Weniger, head of equity strategy at Wisdom Tree, and to talk about why Canada is failing to clear key 1999 resistance against the U.S. And we're going to get into some sectors as well that you're keeping an eye on. But what is that resistance? What's the issue?
Sure. And this has been a frustration. I mean, if you look at these 30 and 40-year charts, we're coming back again and again at Wisdom Tree to, oh, look, it's almost a running joke. Oh, look, this chart's back at 99 levels. Back at any chart, whether it's a valuation of sector X relative to the broad market, whether it's Canadian equities relative to U.S. equities. Oh, how about that turn of the century? And if you think about essentially what's happening with that is you take something like MSCI Canada, or you can take the TSX Cap Composite. It doesn't really matter which one you pick. Ugly situation back in the 90s. Underperforming, big tech bubble back then, started to kind of carve out, when you're thinking about the crude oil price and you're thinking about the Canada of old, where energy was truly much more dominant inside Canadian equities. Now it's much more the big banks. But back then, you had a situation where energy was truly the one that was moving the needle. Not so much now. Even the Canadian dollar doesn't even want to react to the oil price so much. But then you
started to at the beginning of the
it's
and
like
then it's
funky.
Kind of flying a little bit.
I don't know what's going on with the loonie at this point, but you had this curve around back. We pinpointed it March 18th of '99, which is interesting because that's a year before the Nasdaq peak. Canada starts to outperform, and then this big 10-year run until essentially 07, 08, 09 when the crude oil price was starting to peak out, and I think. I don't know whether it's lost on youth. I mean, I see you got some gray hair. I don't know. My hair's starting to get a little bit of gray.
The chart matches our gray hair. I'm looking at it.
But I mean, if you ask somebody who's youthful, it might be difficult for them to conceptualize a multi-year run in something like Canadian equities or any equities. I mean, we have Korea has been working for a couple of years. Japan's been working for about 10 or 12 years. Who else? I'm trying to think in my brain. Nobody else has outperformed the U.S. over the last 10 or 15 years. And so it's difficult to conceptualize these things. Now, the issue is that back before February, March-ish, Canada looked like it was breaking out. Over that, at the time it became support, but now it's broken down. Still struggling here.
What's dragging it then? Or what, is there any?
Well, there's no NVIDIA.
Is that
there's no memory names.
Yeah,
that's a lot of it. I mean, we had in recent weeks, you're sitting here as an equity strategist, and we had in that 1 week time, I think we had 3 names between Samsung, SK Hynix, which are 2 Korean names, and somebody else became $1 trillion corporation. And so now you have so much coming at you, and it just so happens that they're not Canadian listed companies. And so that's part of what's happening. So you almost suspect that Canada would be almost a relative performer in a situation where we get a choppy tape, where we get more volatility, where it's just more staid type names in there. There doesn't seem to be that speculative fervor up here in Canada. There's no Silicon Valley.
I mean, it has been moving out, but not, you think there's more, there could be more, but we're missing.
Well, look, I do think that there's a real possibility that as we talk about with Strait of Hormuz, there's going to be a resolution. We're talking about it this week. And I keep hearing that every week.
Yeah.
I've been hearing that. I think it was February 28th that conflict originally began. So call that 100 days or whatever the number is. We could be still in this all summer long. So that needs to be something that's kept in mind. And you're starting to take a look at relative gaps between energy in the two countries. Even down in the United States, energy, which bottomed out at something like 2.5% of the S&P 500. What is it now? 3.5, something like that. And it's high teens here in Canada. So that right there could be the pair. And then also, the other concept is financials. We've talked about this. The financial sector is doing just fine. There's no lack of health or troubling health. Down in the United States, Goldman's doing fine. B of A's doing, and these companies are doing absolutely wonderful. It's just a matter of whether or not the storyline on AI ends up being a little disrupted. And I think it could be. We were talking about in the earlier segment, the monopolistic profits. I'm trying to figure out who exactly is a monopolist among all these names.
Could it be oligopoly then?
Yeah, an oligopoly would also be a situation that is very fortuitous for these companies, but that is different from a monopoly. And then you also, we're talking about, if you're thinking about in the last week or two in U.S. capital markets, U.S. discourse. Remember a few weeks ago, the Trump administration took a $2 billion stake, or basically seed capital for all the quantum names. Big Blue, which is what we used to call IBM, that's in that list. You have the U.S. taking the stake in Intel. Now there's this whole thing. It's still such early days where Bernie out of Vermont plus Trump, now they both want to maybe
are working together.
Yeah, working together.
Politics makes for strange bedfellows.
The strangest.
Yeah.
The strangest of those two is
but they're both calling for that.
And so now what does that look like? Because what Wisdom Tree did was we put ourselves, I think, on the map in many of these countries by saying, here's an equity basket in fund XYZ or ABC, and it's kicking out all the Chinese state-owned enterprises, kicking out all the emerging market state-owned enterprises. That's a business line for us. And now here you start to say, well, what's the definition of a state-owned enterprise? I don't know.
Yeah.
Is Intel a state-owned enterprise?
Because there's government involved in it.
And so, what happens is the Trump administration going to take a stake in Anthropic? Your guess is as good as mine. And do we then declare that to be an SOE? This is an issue for the latter part of the year and doesn't seem to be getting as much attention. Are they going to be necessarily for profit?
Yeah.
We'll see.
All right, got to take a break on that note there, but always interesting. Still ahead, though, Saudi Arabia is cutting crude prices again, even as supply disruptions keep the market on edge. We'll get more on that after the break. And, of course, our phone lines will open soon for our first call segment, 1-855-326-6266. Send us an email as well. First call at bellmedia.ca. Iran and Israel traded strikes over the weekend for the first time since April. Iran's military now says it has ceased attacks against Israel, but says they would resume hostilities if Israel continues its operations in Lebanon. Meanwhile, OPEC Plus will increase its output target next month. It'll be the fourth oil output quota hike since the closure of the Strait of Hormuz. The wait may be over this week for Apple investors who want the iPhone maker to deepen investment in AI. The company kicks off its annual Worldwide Developers Conference today. It's expected to feature a much anticipated update to its Siri digital assistant, as well as other AI features. The tech giant first previewed its AI features 2 years ago before experiencing delays. 5 companies are being added to the TSX Composite Index. They are Altius Minerals, Extendicare, Hammond Power Solutions, Spartan Delta, and Southern Cross GOL. Meanwhile, 5 companies are being removed. They are GoEasy, Pet Value, Transcontinental, Vital Infrastructure Property Trust, and WinPack. Changes will be effective at the open of the markets on June 22nd. Well, Saudi Arabia is lowering the price of its flagship Arab Light crude for Asia for a second straight month, though it remains near historic highs relative to benchmarks. The move comes as the conflict-linked disruptions in the Strait of Hormuz reshape global supply, forcing producers to adjust pricing while still capitalizing on strong refining margins. For more on this, let's bring in Jeremy Irwin, global crude lead at Energy Aspects. Jeremy, thanks as always for joining us.
Yeah, thanks for having me, Roger.
Okay, what's some of the rationale behind what Saudi Arabia is doing?
Yeah, really, they just set their official selling prices to prioritize shipments to Asia, and they also reduced the term price, making it closer to the spot price that's been trading in the July market so far. And
does that play in with all the other countries? The OPEC had their meetings; they agreed to increase production and output, but really it's kind of symbolic, isn't it?
Yeah, I would agree with that framing, largely symbolic at this point. We still see the ongoing disruptions, which have forced shut-ins in the Middle East, and we're still down roughly 12 million barrels a day of production out of the region.
Jeremy, where does this look like down the road in terms of just the infrastructure of moving oil out of the region? I mean, do we have a situation where the year is 2030 or 2035 and Hormuz is just an afterthought because we've just built pipelines to get this stuff from another direction?
Yeah, and that's aligns with the soundings we've had from recent travels through the region, is that the infrastructure boom in terms of infrastructure workarounds is already started, and that likely continues. In addition to just pipelines rerouting the crude around that kind of vital strait, we're also seeing tank additions where some of these Middle East countries are expanding their tank capacity in key Asian demand centers so they can just have a larger stockpile of supply ready to access that market for any future disruptions.
Now that's long term, but is any of that, what would be the earliest we would see any of that?
Okay. Yeah, we're going to see some pumping capacity added to Saudi Arabia's East-West pipeline, and that probably comes on later this year. In addition, they're going to dredge the port that they're currently exporting volumes into the Red Sea. So that's going to make loadings a little bit more efficient. And then there's talk about some gas pipelines actually being reconverted into crude service through Saudi Arabia, which would add incremental capacity to load out of the Red Sea. But those are probably a little bit longer lead times into 27.
Now, there's talk. I mean, you can't read an article in the paper without them saying basically, a fifth of the world's crude oil is going through Hormuz. X% of that is offline. And what I keep coming back to as somebody who does amateur crude oil supply, what is the amount that we are seeing out of the Chinese in terms of demand destruction or stockpile draws and what have you? Because that's the one where it's this gray zone and nobody can really get a decent number.
Yeah, but it's certainly a large balancing mechanism in the global crude market. So out of China, we would say their crude imports are roughly down about 3 million barrels per day. And it's two things that they've actually cut runs, of course, like you mentioned, but they've also stopped stockpiling for their strategic reserves, which they were doing last year to the tune of about 800,000 barrels a day.
And I'm assuming, though, that will resume if we get a return to the strait, that they'll start stockpiling again and we'll see demand surge?
I would say the stockpiling strategy from China is probably more price sensitive. I think you'd have to see prices come off, probably closer to 70. And we don't even see that really being feasible in, say, the next 6 months, just given the severity of the losses and the bid from countries globally to restock. Could some of their runs come back, or could they draw down more on some of their strategic reserves? That's probably a more probable outcome in the near term.
Now, which countries are getting most hit by we were joking, Roger, we were calling it whether or not it's an oil shock or a mini shock, but which countries are getting hurt the most? I mean, I was told India would be one of them due to intense oil demand. There's no real oil or natural gas infrastructure to speak of in that country, but they just printed a huge GDP number in that country. So where's that guidepost going?
Yeah. So I think in the circumstance of India, what really happened is Russian crude floating on water became their near-term strategic petroleum reserve. And the waivers the U.S. granted for them to run that Russian crude really facilitated that. And what the U.S. recently did is they actually offered a new waiver, but they didn't extend the load date. So basically, crude that didn't load out of Russia prior to the 17th of April is back in that kind of sanctioned barrel market. So that's going to prohibit India from probably accessing that crude to the extent it did in, say, May or April going forward. And to the second question, the other countries really being impacted here, it's largely the emerging economies in Asia. That's where you're going to see the pinch first. They have the least stockpiling. They're being the most disrupted by the lack of supply. And that's where you're going to see, products really probably surge and scarcity become more of an economic drag.
I just want one last question about the OPEC meeting. Their numbers are down to the lowest in nearly 4 decades. Where does that leave it, and how long before we see them, even if there's a resolution, how long before they even get back up to regular production?
Yeah, in our view, you're not even back to regular production by the end of the year, even if you got some type of MOU, say in the next week or two. And the rationale for that is just the daisy chain of things that need to occur before you have normal transit stay status quo. And at that point, you can start restarting upstream infrastructure. But a lot of those, especially heavier fields that rely on water floods, I think there's uncertainty of the pressure of those reservoirs and how that production will come back online. And you also have some damage in the upstream infrastructure space in these countries. So in our numbers, you're still, say, 1 million barrels a day lower even by year end if you have a resolution near term.
All right, we have to wrap it up there, Jeremy, but thanks very much for joining us today.
Yeah, thank you. Take care.
Jeremy Irwin, Global Crude Lead at Energy Aspects. Still ahead, today's market drivers with Bloomberg's Divya Balji, and our phone lines are open. Jeff Weniger is taking your questions on sectors. Call us at 1-855-326-6266. You can email us first call at bellmedia.ca. All right, for a look at some of the early market movers, we are joined now by Bloomberg's Divya Balji, managing editor for breaking news in the Americas. Divya, thanks as always for joining us. Hope you had a great weekend.
I did. It was fantastic. I hope you had one too.
I did. I had a wonderful week. Oh, we're so happy now. Okay, Eli Lilly's happy as well.
Eli Lilly's happy. Novo Nordisk probably not. They're at this American Diabetes Association conference where Eli Lilly actually presented data on its next generation obesity shot. That actually really blew past expectations, and that's really why the stock is up a little bit in pre-market trading. What analysts are really saying about this is with this next generation obesity shot that it has, plus another one in the pipeline, it does have a very good portfolio of these drugs to make it a bit of a market leader and maintain its level as a market leader in this particular drug and in this particular area of focus for the company. That's really why the stock is up today. On the other side, Novo Nordisk stock is down mainly because they also presented data, but it did not impress investors the way Eli Lilly's drugs did, and that's really where you're seeing this difference today. Eli Lilly has really been coming out with a lot of great updates, whether it's for the current drugs that they have or even the future ones. That's really it's a standout right now, and that's why the stock's up today.
And a lot of these drugs are starting to show promise for other possible uses as well, aren't they?
Yeah, that's exactly it, right? It's not just about losing weight anymore. Can it help you with your heart condition? Is there anything else in terms of blood pressure? All that kind of stuff that's related to this in some shape or form is certainly possible that it could help with other conditions too. So I think that's part of it. I think with Eli Lilly in particular, its next generation drugs, in particular, what some of the analysts have been saying is the dosage seems to be smaller, which could also be quite helpful. So another reason for why people could be a bit more excited about its portfolio of drugs that it has, particularly when it comes to weight loss.
All right, Marvell's marvelous flex is flexing after being announced included into the S&P 500.
That's a pretty good one, Roger. Definitely.
I was right off the top of my head there.
Yes. Yes, both the stocks are up a decent amount this morning in trading. I think we do see this a lot. We do see inclusions and exclusions. Clearly, these two are getting included on June 22nd. And that, as we all know, once you're included into a benchmark index like S&P 500, all that means is a lot more investors are going to be piling into your shares in order to be able to mirror the S&P 500 index. So that's clearly helping the stock right now. But I also think there's a little bit of this AI and tech rally that's come back a little bit strong this morning after the sell-off on Friday and overnight in Asia as well. So I think that's also possibly fueling a little bit more of this rally for both of these stocks right now. But still, getting added to the S&P 500, which everybody wants to do, and we're not sure whether SpaceX will get there very quickly, is certainly a reason for a bit of a rally today for both Marvell and Flex.
Yeah, Elon has to play by the rules on that run with that one. All right, Divya, thank you very much as always for joining us.
Thank you.
Bloomberg's Divya Balji. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including an upgrade for Badger Infrastructure. The Let's take a look at some of the notable analyst calls and recommendations. First up, BMO Capital Markets has upgraded Badger Infrastructure following a record earnings report by the company driven by high demand for their safe digging trucks and AI data center and power grid construction. Analysts cite this rapid infrastructure growth and fleet expansion as justification for the company's increased stock valuation. JP Morgan has upgraded Tesla from sell to a neutral, citing anticipated growth in AI and robotics. This shift suggests a pivot from focusing solely on the company's slowing EV sales. Amid separation sentiment in Alberta and a fall referendum around the corner, federal Conservative leader Pierre Poilievre will deliver a speech in Calgary today that kick off to his campaign to promote a unified Canada. CTV's Jeremy Charon has more.
Conservative leader Pierre Poilievre has been clear about where he stands.
I want a strong Alberta within a united Canada.
And Monday, he'll take that message to Calgary to deliver a keynote speech launching his campaign to promote Alberta staying within Canada. In an excerpt of his speech shared with CTV News, Poilievre has a pitch. We do not need a different country, Alberta. We need different government policies in Ottawa. The excerpt reads.
The majority of Albertans who do think that Alberta has been treated unfairly, that it doesn't get the respect for the contribution it makes to the country, and to have someone speak to that could change the minds of those who are what we call soft separatists.
The speech is expected to call for a change in government policies to address separatist concerns. The answer is not to pull away from our friends in other provinces, but to lock arms with them to make the changes we need, the excerpt goes on to say. The Carney government has signed an MOU with Alberta on a potential pipeline, but Poilievre has argued it doesn't go far enough.
Mr. Poilievre is starting to signal to both Albertans and folks in other parts of the country how a better version of federalism could benefit everybody.
Alberta is set to hold a referendum on October 19th that will include several questions, including one related to independence. Poilievre's Monday speech comes on the heels of a similar pitch from Premier Danielle Smith Friday night to a sold-out crowd of her party members.
I've always been clear that I believe in a strong and sovereign Alberta within a united Canada.
Mr. Poilievre has previously described himself as a strong Canadian federalist and a proud Albertan. Monday's speech will be the launch of what he says will be a cross-province campaign to keep Canada together. Jeremy Charon, CTV News, Ottawa.
When we come back, Jeff Weniger, head of equity strategy at Wisdom Tree, will be taking your questions on First Call. Time for First Call and first email, and that's from Richie, who says, what is your outlook on Constellation software in the future? Maybe Constellation and software in general.
Yeah, I mean, I'd probably do software in general
Yeah.
and talk about the concepts. I mean, look, we had the idea of software is eating the world, probably 10 or 15 years of that. That was a refrain. That was something that you heard everywhere. They started to get priced for perfection. And now, I mean, one of the things you have to do is you have to separate what's my view for the business models of the AI companies as opposed to just the sheer enormity of the CapEx expenditures. I mean, we are now in the hyperscalers talking about numbers that are single-handedly moving GDP growth up or down by how far they come in. And I think it's a very real concept to disrupt some of these. Now, I don't know the specific name, whether or not it's going to go up or down, but I think that having a generally jaundiced view with respect to software here in second quarter of 26, where if we draw a line through COVID, draw a line through 2022, which I think those are some pretty big lines to draw through some ugly situations. Yeah. That generally speaking, we're about 17 years into a bull market here. And that is the type of concept that was, by and large, give or take, leading that bull market. And if we end up having a situation where the apple cart gets upset, I don't think it's necessarily a Strait of Hormuz. It could be the new talk of the central banks needing to get in front of the Strait of Hormuz by tightening policy. That could be the type of thing that ends up really upsetting the software names. We need to remember also that in the 2022 action, it was rising rates or the threat therein that ended up really kind of clocking that which was hot during COVID, during 2020 and 2021. So you almost want to start saying, all right, if I'm a believer in tightening policy, if I'm a believer that maybe not everything is hunky-dory in, let's say, North American economics, then you need to start saying, well, what really hasn't participated in the last X number of years, let's say 5 years? And healthcare hasn't really participated.
Yeah, it's been floating around, hasn't it?
Yeah, that's an interesting one. We were doing the price to sales ratio on the S&P 500 healthcare relative to the S&P 500, quarter century type chart. Widest gap between the price of sales of the broad market and price of sales of healthcare on record, basically, in this century. And then you say, well, why am I messing around with software names? There's probably some decent names right here in healthcare. So keep it in mind.
All right. We're going to wrap it up on that note there, Jeff. But thanks as always for joining us. Appreciate you coming in. And have a great time up here. I know you're up here for a few days. That's it for us here on The Street. Thanks to Jeff Weniger, Head of Equity Strategy at Wisdom Tree, for joining us today. And Lindsay's up next with The Open. Trading gets underway 30 minutes from now. Have yourself a great day.